Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. I want to take a tactical look at Bitcoin using the tools that I like to use in currencies and stocks and so on and so forth, just to show you price action and how it reacts to key technical levels, and also to define risk, define the bias in the current digital currency. So let's take a look at the daily chart here. And what you notice here on the daily chart, the blue line represents the 100-day moving average. The green line represents the 200-day moving average. And if you go back in time and you look at this low right here, this is off the high price that we saw. The price bounced near the 100-day moving average. Price first stalled and then bounced to the upside. This move right here, by the way, goes from about 53,000 to about 59,000, $6,000 move. Not a bad move at all in this little move to the upside. Then the market fell below the 100-day moving average. That was the first time the market really had a significant close below the 100-hour moving average. Even these breaks right here, just minor closes below that level. You have to probably go back to here. But the momentum increased to the downside, leading to a move from around the $54,000 level to a low price just a few days later at $42,000. Key break, fast move. That's what happens when the price turns from bullish above to bearish below at one of these moving averages. Later on, as we go along, the price then traded above and below the 200-day moving average here until this point right here, where we started to see a break below that level and then highs that came up and tested that 200-day moving average over about a week's time of trading here. Not only that, the range was very narrow through here, wasn't it? And that's indicative of a market that's really unsure, non-trending, but the price was staying below the 200-day moving average, and lo and behold, momentum started to the downside and the price started to move even lower. That move went from about 48,000 to a low of around 33,000 and change. Big move to the downside. Again, right here, the 100-day moving average holds, price moves lower. Here, the market breaks above the 100-day moving average, and what does it do? Goes to the 200-day moving average, where it starts the sell process once again, ultimately leading all the way down to a low of around $17,592 that we saw in the month of June. So the point is that even in a high flyer like Bitcoin, these moving averages, just as an example, become very key levels that traders can define risk, limit risk, and ultimately make some big money moves if it goes your way. Now, yes, there are times when the price moved above the 100-day moving average here on 1-2 days, and it did move higher, but then failed and moved to the downside. So if you were to buy this break, you may have lost a little money when the price started to move below the level, or certainly you got the idea right here where the price retested the 100-day moving average, stayed short, and then started to move down. You're definitely getting out below that level. But if you catch one of these moves, if you were to be a seller against the 100-day moving average here, you would have, in theory, still been in the trade, because we haven't moved back above the 100-day moving average, and that moving average has moved all the way down to here. Now, there are other technical levels in play, and that's what I want to focus on next. And so off of our low that we saw at around $17,592, the price consolidated over a really close to a couple months time period, and then was able to break last week above a swing high here and swing high here. Those levels, the highs through here came in around 21,868 and $22,400 are these two highs, and the price moved above those levels and tried to extend to the upside. The price moved above the 38.2% retracement, but fell short of the 50% retracement over here. And over the last 6, 7 or so trading days, the price has moved back to the downside. Initially, the price retested this swing area through here on this day right here, and over the weekend and into early trading this week, including yesterday, the price broke below both those swing highs. tilting the bias back to the downside in the short term for the Bitcoin. And today we are seeing even lower levels. The low price today came in around $20,700. The high price at $21,344. So looking at this chart, we in the short term we failed on the break above the 38.2% retracement. We failed on the break above these swing highs, which initially gave our push up to the upside, and we've seen a price move back below that level. So the bias is definitely more to the downside. Let's take a look at the hourly chart now, and if we take a look at this chart again, following the 100 and the 200 hour moving averages, there are definitely some trading opportunities. Come down, hold the 100 hour moving average, move up, break below the 100 hour moving average, should go lower, don't close above here, then reestablish the support, have the correction to the upside, move below the 100 hour moving average and come up and test the 100 hour moving average, move below, move lower, come up here, test the 100, come off, have another one of these fail breaks similar to this one right here. Price can't sustain momentum, closes below the 100 hour moving average, buyers turn to sellers, and the price starts to break lower, 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 and that's what we've seen in trading this week. So extending out further through here, if we were to put a horizontal line at this point right here, this low, and maybe put another horizontal line down here, another swing area, that's where we're starting to move toward. If I were to put a Fibonacci retracement from this low to this high right here, the corrective move to the upside took our price above those daily levels but failed. We are now trading below the 61.8% retracement after breaking below the 50% retracement through here, which was a key break on the downside as well. So we're sort of moving into this swing area through here where we had a swing low, swing low, swing lows, swing high, swing high. Came up to the low end of that area, found sellers, and then found buyers, and found buyers, and found buyers, and finds buyers. So this area right here between 20,472 and 20,757 is going to be the next hurdle on the downside. What is close risk? The 50% retracement of the recent move to the upside at 21,600. Above that, we're going to be looking toward the 100 hour moving average. Anything above the 100 hour moving average turns the bias back to the downside. So the point is that the technicals that I use in my Forex trading can be applied to the Bitcoin market. Why? Because smart traders are always interested in defining risk, limiting risk, and that's what's key for a successful trader. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.